Hey everyone, welcome to the Burb Nest. Today, I will be covering on-chain analysis. I'll be looking over at some Glassnode metrics. I'll be looking over at some crypto quant metrics. I'll also be looking at the Bitcoin chart, seeing what it's doing and how this actually matches some of the metrics we'll be talking about. Welcome everyone. If you guys have any questions, you can always pop into the Burb Nest Discord. I'm Julian, so let's get started. Right now, Bitcoin has been consolidating in this kind of general area. So far, if we really zoom out, I like to say Bitcoin is kind of just having this long-term consolidation where it's been between 60 and right around 30K. It has continued to make higher highs in the very big time frame and higher lows so far. So right now, if we kind of zoom in a little more into this space we've been making, we made a higher high here, and so far we have made a higher low. So what we want in order for Bitcoin to keep this momentum and to look good, we want to make a new higher high. So that is testing 50K. That's what we want. 52K would be my kind of point of this is good. This is what we want. So ideally, we would get a movement something like this on Bitcoin if bulls are really back in control, and this is the momentum that we want to have into the summer. So this is what I'm looking at on Bitcoin in terms of the chart and the price action. Um, so far, it has been playing out pretty well. Even with this wick the other day, a lot of people got scared, but really it was a perfect buying option. And we can see Bitcoin loves doing these wicks right before it rips up. So far, so good on in terms of the price action and what is happening with Bitcoin. So I'll hop over to on-chain with Glassnode because this is something that is very, very interesting on what's happening. Right here, we've had a lot of exchange balance withdrawals. The exchange reserves or the balance on exchanges from Bitcoin has been going down. And ever since March 8th or so, it has been pretty aggressive, the amount of Bitcoin being taken out of exchanges. Now, what does this mean? Why should we care? Well, very simply, if Bitcoin is not on exchanges, it's most likely not going to be sold. It means that it's Bitcoin that is being taken onto a cold storage wallet or a wallet that is not planning on selling anytime soon. So that's bullish because if we look at very simple supply and demand scenarios, it means that Bitcoin is shrinking its supply, shrinking its allowance of how much people can access. However, the demand in that side is something that has been relatively bearish. Um, the demand is not quite there. We can see over here with active addresses, if I just smooth this out a little bit with the 7-day EMA, we can see we had a nice top in May, and that was the true top in terms of retail, in terms of price. The top was May, and ever since we have had more of a bear, like a bear market activity. We can see the top in 2017, how we had this peak of active addresses, and we came down. We had a little bit of a peak in 2019 in the summer, and then we came back down, and we can see kind of this cycle again. We had that bottoming in the summer. We had a little bit of a peak again, higher than 2019 peak. Same thing. It was a little higher in 2021. Then we had that second peak in November, and we came back down. So far, it does look like it's starting to curl back up, and that is exactly what we want to see. We want activity coming back, new addresses coming back, and being active. That means that retail or the smaller participants or participants in general are coming back into the market. So how else can we also track this? Well, we can see that there's a cohort of addresses with zero 0.1 Bitcoin. These can be the dollar cost averagers. These are the people that are just dollar cost averaging into Bitcoin. They're consistent. They took a little bit of profits over here. Maybe they got scared with the dump. But so far, overall, they are very consistent. They will be buying a little bit of Bitcoin dollar cost, and that is why these addresses have been on a steady up pretty much since their beginning. If we look at addresses with one Bitcoin, these aren't exactly whales, but they're definitely smarter participants or bigger participants. If you have one Bitcoin, it means you're a lot more invested in the crypto. We can see that these rounded out. They definitely took profits over in May, and then they bottomed right in the summer. But since then, they've begun to accumulate again, and they've begun their accumulation quite a bit more heavy ever since that bottom in February. That accumulation has started quite a bit more. If we jump over to some bigger whales like addresses with 100 Bitcoin, how have they behaved? Well, we can actually zoom in recently. We can see that they definitely took profits, and right in the bottom, that was the bottom of those addresses. They took the last profits right at 44K, and that's what was kind of holding us down for a while. But ever since, they have been buying quite aggressively, and it looks like they like buying right at 40K. So what's happening? This is why I wanted to jump over to CryptoQuant, because they have some very interesting metrics in terms of the miner position index. I actually tweeted about this the other day, and it's very interesting to see how the miners are behaving because of the price. The other day, we can see Bitcoin has been getting rejected pretty aggressively right here, right at 45K. And it was a while, and then we broke out finally. We got to right around 47, 48K, and then we came all the way back to 40. And a lot of people were very, very bearish with this, but there was a whole nother part of that story that wasn't being looked at. And these are the miners. We can see miners had a lot of activity in the beginning of the last bull run in 2020. Right at the end, December 2020, it was pretty much January 2020, the last time miners were this active in the network. They had that huge spike. They took a little profits. Maybe they thought 20K was the top. And then we moved up. And since then, miners have been pretty much out of the picture. If we actually zoom out, they had that spike at the peak in 2017, and then they disappeared for the bear market. And when did they come back? At the very bottom or right near the bottom before we started to move up again. So, what does this mean? Well, let's look at what's happening right now. If we zoom in a little more, focusing on what's happening, they took that profit right at 45, 46, right at that recent top we had, 46, 47K. Miners said, hey, good time to take profits. The market can absorb it. We're not going to crash the market anymore, but we want to take some profits because a lot of miners have actually been expanding their operations. So, in order to keep expanding, you have to take profits at some point. So it's very interesting to see this minor activity coming back right at this local top, but whales saying, hey, Bitcoin is expensive at 47. Miners and some other whales saying Bitcoin is expensive at 47, so I'm going to sell. But then there's this new cohort of whales saying, hey, Bitcoin is cheap at 40. I'm going to buy Bitcoin at 40. So we're essentially getting squeezed by two sets of whales, saying one saying Bitcoin's expensive at 47, one saying Bitcoin is cheap at 40. And until one of those gives out, we're probably going to see this battle continuing out in the price of Bitcoin and the activity. So if I hop over to the on-chain data on Glassnode again, we can actually look at this by the HODL waves. I really like using the HODL waves because it gives you an idea of who is selling, are coins maturing, and I'll break this down really quick. HODL waves, as we can see this beautiful rainbow, the higher we go, it's the older the coins are. It's coins that haven't moved in a very long time. The further down we go, it's the younger coins, 1 day, 24 hours, 1 week, 1 month. So we can see that in market cycle tops, as we can see here in 2017, the 2017 top, we have a lot of the new coins, a lot of new people coming in. That's the exit liquidity, the retail. And then if we go over here, we had that same effect happen in February, March with that first top in Bitcoin. And then we had a little bit of that in December and November with that last top. But really, we haven't had those young coins enter the market as much. However, if we look at these middle bands, the coins between 3 years, 2 years, even the 1 year old coins, these bands have really been growing. And what does this mean? What does it show? Well, it means that people haven't sold their Bitcoin or haven't moved their Bitcoin for over a year. That means it's people that bought Bitcoin back here. They've gone through all of this volatility with us in the summer and the fall and the winter, and they haven't sold. What does this mean? It's maturity in the market. It means people are less willing to sell. They don't care about the volatility. Maybe they bought a little back here, they bought the top in 2017, and then they sold at the bottom, and now they're totally traumatized from those losses, because if they had just waited a bit more, they would have doubled or tripled their gains from that top. So people are maturing. They're understanding the Bitcoin cycles. They're understanding how we go through bears, through bull, and they don't care. You see this maturity in participants as people are less willing to sell, and they understand that even if there's volatility, they're just gonna hold. That's why these are the HODL waves. We can see the holders are growing. These older coins are really growing and maturing. And as these older coins mature, it shows that participants are less willing to sell. So what else can tell us whether Bitcoin is going to be good, whether it's going to be struggling, or what else do we want to keep an eye on? Well, dormancy is definitely a big indicator in terms of what's happening in the market, because dormancy tells us when old coins are being moved. We can see in 2021 in January, a lot of participants sold right around 34K. They thought that was the top. I can count myself as one of those. I definitely sold some of my Bitcoin there. It was right above 20K. I was like, hey, I'm going to make sure I get some profits. And then it kept going. So a lot of these older coins weren't spent as much. They were over the top, but not as much. And you can see the bottom, it's not older coins being spent. It's these young coins. It's people that are new to the market. Maybe they bought the top and they got scared near the bottom. And again, this first squeeze out of the bottoms over the summer had to do with a short squeeze. A lot of the OGs did not think that rally was real. So they took that profit. They took that profit at 42K. As we know, it's a level of very high importance for Bitcoin. They took that profit there. And taking that profit, they didn't expect Bitcoin to continue rallying and even reach all-time highs in November. That is why, even at all-time highs, we saw participants again taking profits. But hey, what do we see again? Near the bottoms. They don't believe that these rallies are real, or that these are the bottoms. What happens in the recent bottoms? We see so many people calling for 20K, 18K, 10K Bitcoin. Well, so far, we've had enough demand to keep the prices above that level. And we can actually see that dormancy has been going down. That means participants aren't willing to sell. Something to note, I actually forgot, this spike in dormancy is not old whales, it's actually the Bitfinex hackers coins. So if you guys remember that crazy couple that was arrested from hacking Bitfinex, that hack and the FBI seizing those tokens, which is a lot, it was over $1 billion worth at the moment. Um, it was these tokens. So that's why we had that spike in dormancy again, and we can't forget that, because it's very important, because it actually shows that older whales aren't actually selling. Um, so hopping over to crypto quant again, I do want to highlight some of the other metrics, as um, there's just so much happening overall. So if we do go to miners, we can check the miner reserve. And what's this miner reserve? Well, it's how much Bitcoin the miners have at the moment. And we can see a little bit of their behavior, how they spend the reserves, and they spend. And pretty much the bottom in miners reserve was in 2019 top, when they started to accumulate again after that. And then they spent so much money, which is what we talked about. A lot of people didn't think Bitcoin was going to go much further past that 36K area. And once it did, well, miners took that huge profit in that first spike. This did look like a local top. It looked like a bit of a top. A lot of people got scared. And it really wasn't, except for Tesla announcing Bitcoin, that we continued that movement up. But a lot of people said, hey, this is a local top. It looked like a top and it really looked like a cycle top. And that's why a lot of people took profits in there. Now, we keep moving and we can see that miners have basically been accumulating since the beginning of 2021. And this has been a straight up, not super aggressive, but it has been pretty aggressive accumulation since then. And even with the recent profit taking that we saw and we mentioned from the miners, it signifies a very small amount of their total holdings. What does this mean? Well, it means that miners aren't actually taking profits like they did back here at this top. It looks a lot more calculated. They need to take profits to run their operations, to fund everything they're doing, but they're not taking full profits. They don't think this is a full bull market. They think maybe we're back here in the beginning. They're taking very calculated profits at prices where they know the market can absorb these tokens. So it's very good to see miners and overall how we've been making higher lows and the market is taking in all of these tokens. So we can actually look at exchange reserve on CryptoQuant as well. It measures slightly different exchanges, so we get a slightly different graphic than we do with Glassnode, but we can see it has been going down. Exchanges are losing their reserves. And this typically means people are much less willing to sell. All right. So let's take a look at some of the other metrics that can tell us what's happening. For example, stablecoin supply ratio. I really like looking at stablecoin supply ratio because it tells us how many stablecoins are active and are being used, as in how many people are sidelined in the market. We can actually see that at the very top recently. Um, the supply ratio was pretty high because there wasn't that many stablecoins being used. We bottomed and then people entered the market again. But really, people are hedging. They're using their stable coins a lot. It means they're not ready to enter the market again. They're not exposed. So if we want to see this rally continue, we want people to stop using their stable coins. We want people to start getting back into the market, getting some exposure, and then pushing those prices higher. That said, if we suddenly start moving, a lot of these people that were left sidelined in stablecoins might want to FOMO. They might feel left out, and a lot of people are going to start deploying those stablecoins. All right. And then finally, the realized price. Realized price is the price of Bitcoin as it has been spent. So we can actually see it's calculated as the realized cap divided by the total coin supply. So this gives us a general idea of kind of the fair price for Bitcoin. Um, and if we see the realized price, I'll actually move it to logarithmic on both of them because it gives us a better idea of kind of the fair price of Bitcoin. Right now, the realized price is right around 24,000, 25,000. That's the average price of Bitcoin. So it's the average price that has been taken profit on. So that usually acts as a very strong floor for Bitcoin. So in market drawbacks, in very extreme drawbacks, we often go and test that realized price. All right. So finally, we will look at the NUPL, the net profit and loss index. And why is this important? Well, it gives us an idea of market sentiment. If we zoom back to 2017, we can see tops are in red and bottoms are in blue. And we often move in this yellow area. This yellow area is kind of a mix between anxiety and denial. People aren't sure if we're going to go lower, if we're going to go higher, but we're not in this orange or that red. That red is peak euphoria. It's the market top. People can't believe we're going this high. And we can see we actually didn't see that. Even with the November highs, the NUPL wasn't so high. People weren't as euphoric as they were back in 2017. So it's very important to see how the market is reacting, how the market is behaving to a lot of these um, movements in the price and how the market is looking to absorb these new price movements. So if you guys have any questions, I know I covered a lot of these different indexes. I covered the minor flows. I covered um, exchange supply. I covered a lot of these different things. And this is, we have to remember, it's a lot more of the big picture. We're not looking at the 1 hour timetable on for trading. We're not looking at the 4 hour. This is more looking at the weekly, the monthly. How is the market? How are the participants behaving? So just to round it all out and to give you a good idea of how on-chain can be used to help us, well, on-chain right now is telling us that the supply of Bitcoin is shrinking because it's being taken off exchanges and it's moving into hands of those participants that are willing to hold the Bitcoin through long periods of volatility. That said, we haven't had, as we showed over here, the retail or the active addresses come back in full force. So we're having the supply side from supply and demand in basic economics. The supply is shrinking, but the demand is still missing. However, with the supply shrinking at this level, as soon as demand comes in, it's a great force to push prices up. But until we get that demand, we're either going to keep chopping sideways, or maybe even those long term holders just get tired of holding and start selling. So we're going to be tracking this. And if you guys do like this, leave a comment, let us know, and I can keep doing these on chain updates for everyone. So I hope this was helpful. Let me know your thoughts in the comments. You can follow me on Twitter, King Julian I am. Please drop by on the Burb Nest Discord, and I can also answer your questions there. So thanks so much for coming. I'll see you on the next one.